Let's ask none other than Diane Swonk, chief economist at KPMG, and our own senior economics reporter, Steve Liesman. Welcome to you both. Diane, is Europe playing catch-up? They were a little late in getting started, if I recall.
They were late in getting started, but I think what's really important is even the Bank of Canada, which was not late in getting started and had the best prospects of a soft landing, has resumed rate hikes in the last month and signaled that it's willing to go further. There's a fear out there that the inflation that we're seeing, even though it's improving, is hanging around at too high of a level for too long, and they don't want to declare victory until the battle is won. And I think that's where we're at. I think they will be raising rates in July.
You think they will? Steve, what's the consensus for a hike?
I think there is one. Here in the States, there is definitely one, about 74%. I believe people think they're going to be hiking again in Europe and hiking again in the Bank of England. I think this is pretty helpful, maybe marginally helpful to the U.S. in that you have other banks raising rates to a point where it's approaching where the U.S. is. If you look at the comparison, we are number one. I don't know if that's the place we want to be number one in, but we are number one among the developed countries when it comes to rates. We were earlier when we were more aggressive about raising rates, and our inflation rate is lower. And if we get some knock-on effect from Europe and the Bank of England, I think the Bank of England has another set of issues, Kelly, which I think may have to do with Brexit and maybe some systemic or secular inflation relative to Brexit. Their inflation rate is not moving. But I think marginally it's going to be helpful to the U.S.
Do you, Diane, want to add any color to what you think might be going on in the U.K.?
Well, I think in the UK, Brexit is clearly an issue. And what we saw is one of the worst fears out there is a reacceleration in inflation after they thought they had sort of gotten it under control a bit. And that is the fear that's rippling through central banks around the world. And the U.S., although we're further ahead, the Bank of Canada was further ahead than we were and had to go back in. We're talking about going back in. I think this is a theme you're going to see play out through the rest of this year. And the idea that we were as close as we had hoped to the peak in rates is now looking further out. And what's more important is what the central banks are looking for is inflation to cool so real rates rise. And if an underlying inflation does not cool, right, that means they have to go further on nominal rates.
Great point. And Steve, one emerging criticism is the fact that we seem to have fiscal policy moving in one direction while monetary policy is moving in another. Fed chair was just on Capitol Hill. It could have been a chance for him to maybe call that out a little bit and say, listen, $2 trillion of stimulus between Inflation Reduction Act, CHIPS Act, infrastructure bill. We've got massive projects from state and local governments across the country, and the Fed, as a result, has to keep hiking rates. You know, are the two sides of policy aligned here?
He did concede the basic economics of it, even while not commenting on the actual policy, that more government spending in general, when it's deficit financed, is more inflationary than not. Now, a Democratic senator came on afterward and said, well, that's correct. The deficit financing, in part, comes from the lack of revenue, because if you offset the spending with revenue, then you essentially offset the inflationary impact. And then there was criticism of some of the tax cuts that had been in place over the last several years. So that's both sides of the story here. I think that fiscal policy has not been enough front and center in the discussion. When I started learning about fighting inflation, it was the central bank and the fiscal side, and both play a role, and there's not been enough discussion. The question becomes, with the U.S. Spending so much linked to mandatory spending and so little of it discretionary, it's a political football that nobody really wants to carry.